Good morning, and welcome to the 40th Annual Opportunity Finance Network Conference. 40 years. This organization, this sector, this industry has for 40 years been delivering capital to communities and causes that need it. Welcome, and thank you so much for coming to this conference. Now, when Harold Pettigrew first told me about the theme for this conference, shaped by history, made for this moment, it got me thinking. I've had the pleasure of working with CDFIs now for 30 years as an investor and an advocate. This is my 28th Annual Opportunity Finance Network Conference. And so when Harold slotted me in at this moment, at this time, right after the history video and over the course of the morning with lots of historical vignettes, I had to wonder, am I more the history part? Or am I the moment part? As you get older, you wonder. You do. And then I walked in this room. Seriously, please take a moment to look around in this room at the energy, the passion, the commitment. There are literally thousands of people who have dedicated their professional lives to building financial solutions to poverty, to racial inequity, and to the growing injustices arising from climate change. I walked in this room, and you inspired me again to be in this moment and to support you. Thank you. One of the things about being a sponsor at the OFN conference is that you get to spend a few minutes to talk about what our strategies and tactics are for the year to come, and I'd like to focus on just two of those briefly today. The first is climate finance. I have to assume that every single person in this room is well aware of the more than $20 billion of greenhouse gas reduction funds that were provided to CDFIs to help implement strategies that reduce greenhouse gases, a critically important issue. I'd like, though, to talk about a different but related topic, and that is how we assist CDFIs to respond to the damages and destruction of the ever-increasing number and intensity of climate-related disasters. In the last 30 days alone, the southeast of the United States have been hit by two Category 4 hurricanes. Places like Tampa and Sarasota and the surrounding areas now have been devastated 3 times in just the past few years. And in western North Carolina, in places like Asheville, Chimney Rock, Black Mountain, those places aren't places anymore, at least not recognizably. Now, we've seen the work that CDFIs can do as financial first responders, coming in immediately after the humanitarian assistance need, but well before we're ever going to see insurance proceeds or financing from large mainstream financial institutions. CDFIs as financial first responders step into the breach and provide emergency financing to small businesses to help replace inventory, damaged stores, hire temporary workers, and help get a community back on its economic feet. But you all know how we do this. Disaster hits. We all scramble locally to figure out how we can raise some local funding for CDFIs who themselves are struggling in that moment. Only after we figure out how much capital we might be able to have in philanthropy, we then begin thinking about, so what are the strategies and the needs of the community, and finally get around to providing those dear emergency loans that are needed so quickly. This approach does not work. Too delayed response, and so many businesses fail as a result. Now, perhaps FEMA and the Homeland Securities may eventually come to the conclusion that so many government agencies have done, which is that partnering with CDFIs and providing funding to CDFIs furthers their own mission Or perhaps the CDFI fund may launch a thematic funding like they have with Fresh Foods Initiative, Healthy Communities, Disability Theme, every one of which needed an important theme, but so is responding to disasters. But as we wait for that to perhaps happen, private sector investors like Bank of America are going to need to begin acting, which is why beginning in 2025, we will launch an emergency disaster fund without geographic restrictions, without regard to CRA, without regard to whether the Bank of America has branches, staff, or customers in the area, at an effectively 0% cost of capital. We're going to start with $50 million. I know it's a drop in the bucket, but we've got to start someplace, and we hope that working with government agencies, other investors, and foundations, we can grow this over time. We know what CDFIs can do, but we need a flexible, quick responding funding source to empower CDFIs to do the work that you do. Second topic, bringing new investors into the field. Now, it's no secret that for the past few years, the federal government has been the dominant source of capital for CDFIs in its growth. In the past 4 years alone, the federal government has provided close to $80 billion of non-repayable capital, effectively grant capital, through PPP, ESIP, GGRF, and a host of other one-time programs. $20 billion per year is all needed and deserved. But I fear we are not going to continue to see government funding at that pace. And CDFIs now have a net asset ratios that are at all-time highs in our histories. I think there's an opportunity to leverage that with a significant infusion in more private sector capital, low-cost private sector capital. Now, as you know, Bank of America is an investor in CDFIs. We have more than $2 billion deployed to more than 260 CDFIs operating across the country, and we'll continue to do more. We originated a little over $500 million in new loans and investments to CDFIs last year, and we'll continue. But we would like to draw new investors into the field as well, which is why in 2025, we will introduce an investor guarantee program for our CDFI clients. So if you are a Bank of America CDFI client and you identify an individual, foundation, high net worth individual, or corporation, or we find one for you that is willing to provide very low cost capital, say 1% or 2%, but doesn't understand the underwriting for CDFIs, it can get complicated, or doesn't wish to take the risk of repayment from the CDFI, Bank of America can provide a payment guarantee, full payment guarantee, to the investor to get them comfortable and make it easy. They don't even have to underwrite. Now, I believe if we combine the cost of that capital, it needs to be low-cost capital and valuable if you're going to get a guarantee. But that cost of capital perhaps at 1% or 2%, with the, say, 1% guarantee fee that we will charge, together, you end up with a cost of capital blended together that is well below what the market is today. I think that this approach of separating those that take risk from those that provide the lowest cost funding and blending it together has two advantages. First, it provides low cost capital to allow you to do the work that you do. And secondly, it draws in new investors who can see firsthand what you are doing with their money. I believe that many of them will fall in love with the work that you do, just like I fell in love with the work 30 years ago. Now, this year we have 16 Bank of America representatives that are here. Over the course of the next 3 days, we'd like to talk to you about these programs and several other programs. We want to hear your feedback, your ideas going forward. We want to work with you, advocate for you, and ultimately deliver the kind of capital that you need to serve the communities. As always, for all the work that you do and all the difference that you make, I thank you. God bless and have a good conference.